Okay, this is Brian for Timing Strategies, Sunday, June the 8th. Kind of just getting our website back up, so this is going to be a very short, quick, and sweet commentary. I don't even know if it's going to work because we're having technical difficulties with posting some of the articles. We've got a new host, a new tech, whole thing. We posted our stock market choke points article, the most recent one put out last Friday for clients. We tried to put that to our website. It's not. The images are not coming in as they should. They're getting basically cut in half. So if anybody that gets this video that wants our article, I'll send me an email, give me a call, but preferably send me an email. I will forward that to you in a Word document where the images come in complete. Short story made even shorter. Obviously, everybody knows what happened last week with a big bad down day on the Dow. We broke the range. I'm anticipating getting long, depending on price action, if we get follow-through starting Monday, Tuesday this next week. If it's enough follow-through to as deep as at least 1350 on the S&P, that comes out to about 134.80 on the spiders, possibly 35%, but I very well may not do that because there's a lot of structural weakness in this market. We may not be getting long whatsoever until we get at least down to the 1280 level or even deeper, which I've got B2, which has been in effect this whole year, down at the 1230 or 123 half level on the spiders, 1230 on the S&P cash. There's a big divergence between the Dow. Bring this in here. The weakness in the Dow versus the rest of the indices. The Dow may hit if we get 120 on the diamonds, which is about 1200, 1250 on the Dow. Depending on price action, what we're going to do there, that may correlate to the spiders or the S&P, at least down to the 134 or 1350 level on the spiders versus the S&P cash, as deep as 131. Again, these markets are extremely divergent, and I anticipate the resolution to be determined in more than the bear case, whereas the NASDAQ and the Russell, here's the IWM, much stronger. Here's the Qs. Everybody knows this, or most people should. Qs much stronger than the S&P and the Dow, but it doesn't take much to move the Qs. One or two stocks like Research in Motion or Google is pretty much responsible for almost 30 to 50% of this up move that we've seen versus the rest of the market. Longer term, I'm extremely bearish. I anticipate the Qs and everything to come at least back down to the 44 level, if not deeper, to down to the 42 level on the Qs. Much further on a percentage basis to go than the Dow or the S&P. So again, the divergence I anticipate to be resolved to the downside, but right now a little bit of a conundrum here. So let's see if this posts, and I will keep working on the website to keep everybody up to date. Again, if you have any questions, you want the article for the stock market choke points, our most recent one for June 6th, last Friday, just send me an email and I will forward that to you in a Word document. And any other questions, please go ahead and feel free to email us. I wish everybody the best. Happy summer, and let's see what we get as far as a result from this video post.